Thank you very much. And next up, Aspire Mining, Managing Director David Paul, to tell you about their projects in Mongolia, I believe.
Thank you very much. Going to change the commodity again, and I just think probably it's worthwhile to have a little refresher. We're in the coal business, but not all coal businesses are the same. So going through the normal disclaimers, that's a lump of coal. It's from our project called Nursty, which is a hard coking coal project. It's a very special coal because you use it in a blast furnace, and only 7% of all the coal mined in the world actually goes into blast furnaces. Blast furnaces are the number one cheapest form of production of steel, and we use steel, and we'll continue to use steel in probably ever increasing quantities of intensification. Coking coal is not thermal coal. It has a long-term definitive future, and the other point to note, it's rare. There are very few places in the world that actually have quality hard coking coal. Australia is one, and actually Australia is the largest seaborne exporter of coking coal in the world. Canada, US, of course, have their own domestic industries. By far the biggest miner of coking coal is actually China. And they only import around 10% of their needs. They otherwise have a very, very large, very, very deep coking coal industry. Interesting enough, most of their coking coal is in the north of China, up near Shaanxi province, Inner Mongolia, and lo and behold, across the border in Mongolia is substantial large coal basins. And just directly to the north of Mongolia is the Kuzbass Basin, the Elagast Basin, all of Russia's major coal basins. No surprise, they're all linked together geologically. And it's fortunate in that on this map here, with Mongolia in the centre, is around 70% of the entire world's steel producing capacity. This is Steel Central. These are the major consumers of coking coal. All those little blue dots there are all steel mills. Chinese, of course, Korean, Japanese, they're the major players. Notice Mongolia where it's located. I'll be focusing on our assets, which are called the Yavut Coking Coal Project and the Nursty Coking Coal Project, which is up here in the north, up near Russia. But fortunately, especially in relation to Nursty, adjacent to existing infrastructure that will allow supply into that major steel industry. Mongolia is already a very large, maybe surprise people, a very large player in this industry. They are the second largest exporter of coal into China. Australia's number one, as you can see, Mongolia's number two, and the rest are bits and pieces. But as a fact, it's not equivalent to what Australia is doing in that of that 26 million tonnes imported into Mongolia, only 14% is actually at an internationally traded specification. 86% of the coal coming out of Mongolia is essentially raw and is essentially beneficiated on the Chinese side of the border. So the Chinese traders, Chinese companies are absorbing all the margin and paying most of the Mongolian players just enough to stay in business. We are looking to do something very different to that, in that we would like to join Mongolian Mining Corp and be only the second producer of washed coking coal in the country and the only producer of washed coking coal in the north of the country. And that's our goal in next year. We're ASX listed. We have a market cap of around $25 million. We have 3 assets in Mongolia. One is a small starter project I'm calling, which is the Nursty Coking Coal Project, which is actually adjacent to an existing sealed road that allows us access to markets. Our second asset is our big discovery, which we made in 2010 and 2011 and 12, which is the Yavut Coking Coal Project. It is the second largest coal deposit of its type in the country. And this is a country which has some very big deposits. So that was very exciting. At one point we had a market cap of over $500 million based on Yavut alone back in 2011. Our third asset is actually our leverage to the One Belt, One Road policy, which is obviously you see a lot about. We're an unusual company in that we are very, very leveraged to that policy because in June 2016, the three presidents being the presidents of Mongolia, China and Russia, designated the Northern Rail Corridor as a new One Belt, One Road rail corridor for trade between China and Europe through Russia. And it's going through Mongolia. This section here between where the rail finishes at Erdenet through to our main deposit is listed as a key part of that corridor, and is one we're working on at the moment, and I'll explain a bit further later. With that rail developed, the commissioning of a world-class, world-scale Ovuk coking coal project can progress. But to start with, given our market cap and given our proximity to market, we're starting with the Nursty coking coal project. It's an asset we purchased and then further developed over the last 3 years during the downturn in the coking coal industry. In 2018, we're looking to do a 58-hole, 10,000 metre program, both infill and extend the resources. The resources are currently around 13 million tonnes, and complete a mine plan and a feasibility study for a shallow open pit operation. We're looking to put only the second wash plant in operation in the country, about 1 million tonne per annum, and that'll produce around 500,000 tonnes per annum of hard coking coal. I won't necessarily go through all the specs on the right-hand side, but the indicative specs show that this to be a high-quality, hard coking coal, low sulphur, good fluidity, ticks all the boxes. And this specification makes it a very good import replacement opportunity for other coals out of the US and out of Australia. This is a step towards the bigger project. The bigger project is Ovuk, which is 20 times the size of Nursty. A lot bigger project. We're looking to be able to improve our market cap, cash flow, profits to be able to reinvest in this. To give you an idea of scale, this is an open pit deposit which runs for 7 kilometres long and 2 kilometres wide, down to 300 metres. Contains roughly 250 million tonnes of recoverable coking coal in a reserve. Of that, about 190 million tonnes is recoverable in washed coking coal. It's a high quality, high fluidity, what they call a fat coking coal, which is a coal which is used as a blend and enhances lower quality coking coals. Has very high caking properties, and we've been able to show that this coal, in blending with thermal coal, it's the right type of thermal coal, creates a hard coking coal blended product. This operation, because it's a big, thick seam project, some of the seams are over 40 metres thick, that we can run this efficiently at a production rate of over 10 million tonne per annum of washed coking coal. This is a big mine, and it's world class. But if you're going to run 10 million tonnes per annum, you cannot do it by trucking. It will need this rail connection, which I'll then just go on to now. In 2015, we established a subsidiary called Northern Railways, which we currently own 80% of, and that secured a rail concession, a public-private partnership with the Mongolian government, to build, operate, and then transfer 100% of a railway back to the government. It's 547 kilometres, and as I said before, it's now part of One Belt, One Road. Obviously, you know, we're not planning to be big rail operators here. We're a resource explorer developer. So we brought in a consortium that initially started with China Railways Construction Corp, the world's largest rail construction company, state-owned enterprise out of China, as our nominated EPC contractor and principal identifier of funding for the project. The project is large. It's $1.25 billion. It's a large project. But within the scheme of things for One Belt, One Road, it's a deliverable project because the economics stack up, and we're going to be the major customer to start with. In just a few months ago, we've actually added another Chinese SOE, China Gazuba Group, very powerful company in terms of financing capabilities as well. They've delivered to us last month a feasibility study, and we're just working through some of the assumptions of that at the moment. Gazuba actually looked to fund all the remaining pre-development costs of this railway at their own cost, subject to network guarantees being put in place. Is something we're working on at the moment. This creates a new rail link between China and Europe between China and Europe through Mongolia and Russia. Just finishing off, we've got some enormous assets. They're world-class assets. We're a relatively small company. I know some of the other presenters are frustrated with their market caps. This is a recent table produced by research out of RFC Ambry and out of London. Came in 2 weeks ago. And comparably speaking, if you can see our comparisons on our EV per tonne of resource, EV per tonne of potential saleable production, against a whole bunch of unfunded but exploration development companies, we are very, very, very cheap and very, very leveraged to future success. So just to recap, we're well funded. We've got $11 million in the bank as of the end of December. Enterprise value of just $17 million, which is extraordinary given what we have. We've got a near mine production target, which we're looking to get into production next year. And as I said, we already have a Nunavut coke and coal project, which is highly leveraged to One Belt, One Road funding. And thank you for your time. I'm on booth 8. Thank you.